This is Mac Ken.
Wall Street's minor meltdown, round 2 for Fitness Plus, and Unky Jean and Young MC on the Apple year ahead. It is Tuesday, the 5th of January, 2021. I'm Ken Ray, and this is news from macOS Ken, brought to you by yours truly and sponsored by Sunbasket. Get $35 off your order using promo code macOSKen at sunbasket.com/macOSKen. This show is also sponsored by Audible and their great new plan, AudiblePlus. You know Audible is the leading provider of spoken word entertainment and audiobooks. Now they have this sort of smorgasbord plan, giving you access to thousands and thousands of select Audible originals, audiobooks, and podcasts, including ad-free versions of popular shows, as well as exclusive series. I told you about some of the titles that grabbed my attention. I'm currently digging Mindfulness in Plain English. In my library, though, are such titles as Roots by Alex Haley and The Doors of Perception by Aldous Huxley. While you work out, on a walk, or on a drive, lots of great stuff to hear, and you can start hearing it for free. Visit audible.com/macOSKen or text macOSKen to 500-500 to start your free 30-day trial. Whether you're looking to strengthen skills, be more informed, or just be entertained, Audible Plus has tons of titles for you. Visit audible.com/macOSKen or text macOSKen to 500-500 to start your free 30-day trial. And a big thanks to Audible for sponsoring today's show. Here was the headline of a Bloomberg piece, highlighted by Philip Elmerdowitz, Apple 3.0. Apple leads big tech slump with worst drop since October. Quoting the Bloomberg piece, Apple led shares of the largest technology companies lower in the first trading day of the year, suffering its worst decline in more than 2 months amid a broad market sell-off. Couple of things. Actually, a few things. First of all, Apple led is an interesting term. It's not that investors were selling Apple and others started selling other stuff following the Apple lead. More like any shift in Apple represents a lot of money, given the company's phenomenal size. 2. The numbers in the story were posted midday, when shares were at their lowest. According to Bloomberg, shares of the iPhone maker fell as much as 4.5% on Monday, on track for its biggest drop since the 31st of October. Amazon, Microsoft, Alphabet, and Facebook shares all fell at least 2.6%, compared with a 2.5% decline in the S&P 500. But none of those numbers held. By day's end, the S&P 500 was only down 1.48%, Alphabet was down 1.35%, Microsoft was down 2.13%, Amazon did stay down 2.6%, and Apple recovered from its 4.5% drop, ending down only 2.47%. And thing number 3, the real story is the broad market sell-off mentioned in Bloomberg's tech-centric piece. 2 pieces from CNBC tackle that broad market sell-off. One of those starts with the line, "Stocks dropped on Monday, the first trading day of 2021, amid concerns about global coronavirus cases and the Georgia runoff elections." That piece gave roughly equal attention to those 2 issues. On the COVID side, there was talk of the more stringent lockdown announced for the UK, as well as issues getting vaccines into arms of people here in the States. As for the political side, there's apparently worry on Wall Street, and thus among some investors, that if both Democratic candidates prevail in the Georgia runoff today, corporate tax rates could go up, which I guess would mean the end of days or something. The other piece from CNBC was devoted entirely to politics. Political worries rattled the market Monday and might not go away soon, read the headline. It concerned itself partly with today's Senate runoff in Georgia and partly with plans later this week to challenge Joe Biden's Electoral College victory in Congress. On today's election, the piece says the worry for the stock market is that if the 2 Senate seats are taken by Democrats, each party would have 50 seats, but Vice President-elect Kamala Harris would cast the tie-breaking vote after she takes office. Biden would then be able to press more of his agenda, including capital gains and corporate tax increases. Which, of course, brings us back to Ragnarok. As for the challenge to Biden's win, 2 folks with whom CNBC spoke presented sobering possibilities. Tom Block, Washington policy analyst at independent research firm Fundstrat, says the worry isn't this week, but weeks and months and years ahead. Quoting CNBC, Block contended a danger is that it could start a spiral where Democrats may challenge the next election won by a Republican. If the friction continues and the parties continue to try to impair each other's ability to govern, there could be longer-term issues for the U.S. The way Block sees it, it's creating a question that has never existed about the stability of the transition from one government to another in the U.S., which has been a pillar to the dollar as a reserve currency. Meanwhile, Brian Gardner, Stifel chief Washington policy analyst, isn't freaking out, even as he lays out reasons people might want to freak out. Quoting Gardner, "I don't think there's any short or even medium-term market risk. I think this is generally political noise. The bigger question is, did this signal another turning point in U.S. politics that makes governing impossible, or at least more difficult than what we're used to? If the answer to that is yes, then there is market risk that longer term, the federal government, the U.S. becomes ungovernable." Okay, that part does sound kind of end of days. Now, even with all of that, Apple spent 2020 basically printing money, either in spite of or because of #these uncertain times. Why would people sell? Perhaps because of all the money Apple printed in 2020. Philip Elmer DeWitt had one parting thought tied to his Bloomberg blurb. His take: friend of the blog Robert Paul Lado likes to say that investors often use Apple as an ATM for the market, withdrawing gains in Apple to fund other investments. Apple gained 81% in calendar year 2020. In other words, it's possible that someone or several someones sold Apple so they could buy other stuff. It was suddenly going cheap. What an amazingly intricate day. It was a bit like watching a domino rally on Monday, keeping an eye on Twitter posts from 9 to 5 Mac's Michael Stieber. The first one I spotted said that Apple's 4 stores in Scotland would be closed starting today. The next one said all 18 UK Apple stores open Monday would close from January 5th. Includes every location in Scotland. Most of the other 20 stores closed just before the holidays. Then came the finale. Apple Insider ran a piece Monday afternoon saying Apple will shutter all of its retail locations in the UK amid a new national lockdown implemented in response to a surge of COVID-19 cases and hospitalizations. The piece says UK Prime Minister Boris Johnson reimposed a lockdown with tighter restrictions than last time. This one, set to run through the middle of next month, orders non-essential businesses to close, including retail stores that sell electronic goods and mobile phone shops. That's lights out for all 38 of Apple's UK stores through the middle of February. More news in a moment, but first a word from Sunbasket, delivering oven-ready meals that are fast, fresh, and delicious. The new year is a great time to try new things, and Sunbasket is a great way to do that. My last order from Sunbasket had 2 of their meal kits and 1 fresh and ready meal, and each was the bomb. The ginger scallion skewers with apple cabbage slaw had a wonderful blend of flavors, while the mojo tacos with salsa verde made me sad I had to share with people. Their fresh and ready meals are great as well because they're fresh and they're ready. I had the butter chicken with basmati rice pilaf heated and eaten in really short order. The chefs at Sunbasket have won Michelin awards and a James Beard Award, which is why everything tastes amazing. See what they can cook for you and do it for less. Right now, Sunbasket is offering $35 off your order when you go right now to sunbasket.com/macosken and enter promo code macosken at checkout. That's sunbasket.com/macosken and enter promo code macosken at checkout for $35 off your order. Sunbasket.com/macosken and enter promo code macosken. And a big thanks to Sunbasket for sponsoring today's show. Apple is serious about getting you fit. Or serious about getting you on Fitness Plus anyway. I told you yesterday of the synergistic promotion between Apple Music and the recently launched Fitness Plus service. Now Mac Rumors says the company has added a new weekly Fitness Plus series. According to the report, Apple has added several new goal-setting workouts to its Fitness Plus subscription service as part of a new weekly series that aims to help users keep on top of their training and stay motivated into the new year and beyond. I will say this sounds like a new series because the whole thing is new. Apple had said that Fitness Plus would be updated weekly, which it apparently is. The piece has one of Apple's trainers saying this is a new series to keep you on top of your Fitness Plus workouts this week and keep you motivated. Make sure you check back every Monday for a new video. Whether you're just getting started with absolute beginner workouts or you've been into fitness for a while, everyone is welcome. In all, the piece goes on to say Apple on Monday added 24 new Fitness Plus workouts covering all video categories, which include cycling, strength, yoga, high-intensity interval training, core, dance, treadmill, mindful cool-down, and rowing. They sound pretty serious about Fitness Plus. We'll wrap the day with great expectations from Unky Gene and Young MC. I refer, of course, to Loop Ventures principal Gene Munster and TF International analyst Ming-Chi Kuo. We'll start with our pretend uncle, who thinks Apple shares will outperform the rest of the FAANGs and isn't shy about saying why. FAANGs are the group of tech stocks that includes Facebook, Amazon, Apple, Netflix, and Google. Yes, I know that last one is called Alphabet now, but then it wouldn't spell FAANG. Having beaten the others for 2 years in a row, a post to the Loop Ventures site has Mr. Munster saying why he thinks Apple will do it again. First, there is the accelerating digital transformation. Put a different way, even when people can go back to work, a lot of them will keep working from home. Quoting his post, "It's clear our dependency on tech has accelerated because of the pandemic. While the velocity of this adoption may ease post-pandemic, our view is that much of the change is sustainable moving forward. For example, we estimate the percentage of U.S. knowledge workers working remotely will settle long-term at a level 3 times greater than before the pandemic." You know what that means? More Macs and more iPads sold. In short, says Mr. Munster, our reliance on the company will continue to grow in the years to come. Next up, expect fiscal year 2022 street estimates to inch higher. This one's funny. Basically, he thinks people are expecting too little from Apple next fiscal year. But as we get closer to next year, people will start to expect more, which will drive up Apple's share price. Third, 5G to initiate multi-year iPhone upgrade cycle. Do I really need to explain this one? According to Mr. Munster, Apple should enjoy its biggest smartphone upgrade cycle since iPhone 6. The way he sees it, as 5G coverage expands and performance improves, he and his think it will spur a multi-year iPhone upgrade cycle versus the typical one-year cycle. Starting in fiscal year 2022, he believes Apple is positioned to have 2 to 3 years of 5 to 10% annual iPhone revenue growth. He believes investor consensus is looking for low single-digit iPhone revenue growth during that period. So, that would be more. And finally, fourth, new business segments. These would include things like a Hardware Plus services subscription bundle and whatever Apple eventually does in automobiles or transportation. He doesn't indicate that either of those things will happen this year. He does, however, think shares of Apple will be rewarded by the anticipation of new business segments. Nice work if you can get it. And finally today, TF International's Young MC hit with hardware expectations for 2021, still with that New Year smell. A piece from Mac Rumors has Ming-Chi Kuo calling for the long-awaited AirTags item trackers and an unspecified augmented reality device. He's also looking for new AirPods, more Apple Silicon Macs, and Apple's first devices with mini LED displays throughout the year. Some of that can't help but be right. The rest of it, we'll find out in the next 360 days. Coming up in a few minutes, last week on the live show, we talked about the second most important Apple stories of 2020. This week, I'm asking a few podcasters for their takes. MacCast's Adam Christensen starts us off today. Find out his pick for the runner-up story in a few minutes. Look for that show wherever you get podcasts. Yesterday on macOS Ken Live, we talked about Monday's minor melting on Wall Street. What will we talk about today? Find out when the show goes live. 3:30 Pacific, 6:30 Eastern on my YouTube channel, youtube.com/KenRay. You can also grab the audio podcast, macOS Ken Live, wherever you get podcasts. macOS Ken, brought to you by me and sponsored by AudiblePlus. Visit audible.com/macOSKen or text macOSKen to 500-500 to start your free 30-day trial. This show is also sponsored by Sunbasket. Get $35 off your order using promo code macOSKen at sunbasket.com/macOSKen. Advertising handled by Backbeat Media, online at backbeatmedia.com. You can reach me a couple of ways. Info at macosken.com or call 716-780-4080. Until next time, that is news from macOS Ken. I'm Ken Ray.
Ciao.